Stocks this week really rode a roller coaster. There was down days, up days. You didn't know which way the market was going to go. In some days, the market went up and it went down severely. Today's Friday, April 12th, and the market started off lower, then it went lower, then it went really low. So the roller coaster really is going to stick around for a couple of weeks. Last week we were down, stock prices were down last week. Stock prices again collectively for this week are down. And what's also exciting is the volatility. Volatility means that there's fear. Volatility equals fear for stockholders, and the volatility index is up substantially. That said, I expect more of the same for the next 6 to 8 weeks. Reason being is, to begin with, stock prices are too expensive. The market has really gone up for 5 straight months, and over the last 18 months, the market's up substantially. It has to give up some of the gains in order for stock prices to be more fairly priced with the valuations of those companies. The next couple of weeks should continue to be a roller coaster. We'll see some days where stocks really rise. We'll see days when they really fall. It seems that when stocks fall on a given day, they fall faster and at a steeper rate than when they rise. Especially with fear in the market, you'll see that the market will be reluctant to really have substantial gains over a long period of time. And I'm talking about for weeks, like we saw from the end of October up until the end of March. Let's see how the market goes, but buckle up, make sure your harness is on, because the roller coaster is going to continue. The S&P over the last 5 days lost 1.6%. Not too bad, but there was so much volatility. We had moments where stocks really dropped quickly, and we had moments like on Thursday where stocks really went up. Boy, it really confused me to see such an up day on Thursday and then followed by a really down day on Friday. So that volatility really is a signal that there's fear, especially as investors are getting out, trying to cash in some of their gains. That type of fear is going to drive the market lower. If we look at the last month, we can see that the high point for the market was March 28th. And since then, the S&P is down 2.5. The NASDAQ is down more than that. And the Russell 2000 is down even more. So we're seeing that a 2.5% drop. I believe that we need more than a 10% drop for it to be a good correction. And a good correction just means that stock prices are closer to their fair value. And then we can have a good floor to then build another run, another rally on top of that really good floor. Looking at the last 5 years, these corrections are normal. We had one in 23, even though the whole year was a really good one. In 23, we had about a 10% correction mid-year from July 28th till the end of October. We had a solid 10% correction, and that was the second downturn we had. We had one in the late spring as well. And at the very end of 21 until the latter parts of 22, we had a 25% full-blown, correction on the S&P as well. So these corrections happen, and then we build another rally on top of them. So it's nothing to be completely concerned about. It's just a normal course of business. Now, the good news about these pullbacks is it gives us an opportunity to buy these great companies at a discount. And I like buying great companies at a discounted price. So count me in if I could continue to buy shares in a variety of companies. You can check them out on my channel of the companies that I'm buying into and buy them at a better discount. Example would be Alphabet. The same company I was trading yesterday is discounted today by 2%. Other examples, I can go on and on. The same companies, day after day, week after week, if they continue to go down in price, I continue to buy shares because it's the same company. They're actually even getting better. They're growing, they're becoming larger, creating more profits and more free cash flow. So as these corrections happen, it's great for a value investor. That just means that I get to buy a greater portion of that business at a discount. Successful investing requires that we keep our emotions in control. Similar to riding that roller coaster, you can either enjoy the ride, the ups and downs and so forth, or you can be in complete fear. Now, back to investing, it's important to separate emotion from fact. And the facts remain that when you have these corrections and down days on the stock market, it's actually good news. You're getting a discount on a company that you really want to own. In my case, I do my homework on companies and I get myself ready for days like these. It's not fun to watch my portfolio go down in value. It isn't. But I know that this is the time to catch stocks at a really good discount. If it continues to go down week after week, month after month, that just means that I'm getting even a better discount on that company. Think back about Meta. Meta was trading for like $85 a share in late 2022. Now you'd be up about 400% if you would have bought during those discounted days. Let's remind ourselves of those days as we go into these corrections, just to keep our wits and continue to make good, sound decisions that will pay off in the long haul. That's my video for today. I hope you enjoyed it, and I really appreciate you watching.